Bitcoin price is currently at a very critical level. It's moments away from either breaking out or breaking down, consolidating into a tight wedge. And I've decided to hedge my positions by taking 2 trades today. I am going to show you those trades. Stay through until the end. Both of them are in profit despite them being in opposite directions. So a very interesting hedge. I'm going to show you how I did it and how you can too. Stay tuned until the very end. Without further ado, let's get started. You can see that some of the meme coins are starting to pop already. You have 𝗕𝗬𝗕𝗬𝗕𝗫. I wouldn't be surprised if 𝗕𝗬𝗕𝗫 is next. But that is, of course, if Bitcoin continues to hold up. That is the most important thing. And we have a lot that's been going on with the Bank of Japan and how that's going to affect the DXY and the stock market. So let's get straight into the actual show. And from peak over here, they've shown that the JPY dived sharply against major currencies on Wednesday, which is, of course, today, after the Bank of Japan maintained ultra-low interest rates, disappointing some investors who had hoped the central bank would relax its yield curve to control policy further. So essentially, that means that their stocks are going to rally, their currency is going to suffer, and against the dollar is probably going to bounce since it's also at a key level. I'll show you the technicals on that shortly, but TED Talks over here shows that the market was betting on a hawkish Bank of Japan today, but they got it wrong. There was no change to key interest rates at 0.1%, negative 0.1%. Yield band is intact, and then inflation expectations have now been raised, meaning that they risk going into hyperinflation, similar to the US. Well, the US not hyperinflation, but obviously inflation getting out of control. So it's quite a shocking move from Japan, at least the Bank of Japan. And then TED Talk says, yeah, this should see the USD JPY move higher. In other words, strength from the dollar in the short term, and then correlated market should follow. So BTC and gold are inverted and not correlated. They're inversely correlated, which means that you should expect the potential for the pullback in Bitcoin and gold to potentially take place. I know a lot of metrics already have Bitcoin in the oversold territory, so it is time to hedge the bets, and that is why I took those trades, and I'm going to show you how you can do the same. Stay through until the end. But I also wanted to mention a little bit on the high time frame whether these pumps that we've had recently have been enough to change the market dynamics. And Stock Money Lizards over here shows that this is the longest bearish 2-week MACD period in Bitcoin's history, and it has just ended. So you can see over there the cross has just taken place. This one lasted for 46 bars, 46 2-week candles. So 46 times 2 weeks is how long that remained in a bearish cross. The previous bear market lasted for 32, and then the previous one before that was 37 bars. Now, is this something that you should take seriously? Here it is. Here's the MACD on the 2-week. You can see the cross has just occurred. We're printing the second histogram towards the upside, and typically these are potential trend reversal patterns. So it is something that, at least for a relief rally, that I would take quite seriously. And if you were to rally from here to the major underside resistance coming in at 30K, that is still a 73% move for Bitcoin. Okay, well, let's say 30K is 48%. But if you went all the way to deep into the underside resistance, you're looking at about 77%. And there's a whole thread over here from 𝗕𝗬𝗕𝗬𝗕𝗬𝗕. I'm not going to read it all, but you're welcome to go and have a look at it. I'll like it. I'll retweet it. He's gone through all the potential bullish scenarios which are playing out on-chain metrics as well as high time frame chart-wise. So feel free to go and have a look at this and see if it's enough of a case. For me personally, you guys know that I think that you need to break structure. You need to print on a price action basis, a higher high and then the next higher low, and then it's game on. And if you look at Kyledoops, he says that 30K is like a magnet. Now, Kyledoops is a pretty good trader, pretty synonymous over here on crypto Twitter, and he's outlined his various levels and how this could potentially play out. And believe it or not, I tend to agree with him. A lot of people I saw yesterday were quite surprised by my switch in bias, that I'm not looking for necessarily a major capitulation or breakdown in crypto. And I'll tell you the reason why very, very quickly. The reason why is that price can capitulate in Bitcoin or assets can capitulate either through price action with strong sell-offs to the downside, or they can capitulate over time. So if a bear market lasts long enough and it's sideways action for a long period of time where the market goes into backwardation and you have extremely low volatility with a big drop in open interest, that is also one of the signals that I look at to potentially end a bear market. And that is something that has taken place. Now, I'm playing this very cautiously. Of course, I'm being cautious because it could still be a massive bear trap. And the other big reason was the break of this lucid SAR, which I've shown you guys before. That is part of my trading system. I take that incredibly seriously. When you see a candle like this that smashes through these SARs, the little asterisks that have held the price down for such a long period of time. So getting back into Callio's post over here, and he says, expecting one more wick beneath $20,000 before we see it. Bit of chop or accumulation beneath the high time frame trend before the guard candle makes sense. The guard candle will be here soon enough though. And he's got his fractal that's kind of playing out. So he's showing this is kind of where we are now within this region and looking for one more pullback. I think he has a more zoomed in approach over here. So he says something like this. Let's click on that. He says something like this. You can see this is kind of where price is now. I think we've pushed a little bit higher even into this green zone at the top, and then looking for a pullback. And he says the candle where bears try to fudge you into believing that this is only a scam pump because there is a clear structural breakdown at high time frame resistance, which would be the case. You reject from here, this is high time frame resistance, and technically you want to sell resistance and buy support. But the difference is, because of what I've seen happen with the drop in open interest, the low volatility, and the backwardation that's taken place, it does lead me to believe that there is a potential that this next high low will be bid aggressively for a lot of people who for the past 3 weeks have been sitting on the sidelines with extreme FOMO. I don't have any FOMO. I've been trained in this. I'm seasoned as a trader now, 6 years in the game. I've passed that phase, thank God. So no FOMO from my side, but I understand a lot of you probably do have. And what you can expect is when price does start to come down now, people will start aggressively bidding into that. But there's no certainties. I'm busy going through Ray Dalio's book at the moment with the principles is what he calls the book. And he discusses how you can never, ever think that you are 100% right. There's no certainties here, which is why it's a game of probabilities, and you have to take the risk and calculate where you would be wrong to exit that position and not lose too much money. And that's exactly what I'm doing. So that's that from Callio over there. Let's quickly see if there was anything else that he finished off with. And he says, yeah, bear trap soon. So it's pretty much the same one over there. So that's what we're watching. Squeeze back up to retest a high time frame bearish trend. And then after that, a possible break through that zone. And this is a great tweet over here from 𝗴𝗡𝗵𝗕𝗬𝗕, and he says that he read through the whole Delphi Digital report. So he says Delphi Digital recently just dropped a macro report revealing what it means for the crypto market in 2023. These guys are also pretty seasoned investors with a great team and very expensive resources that most of us don't have the availability to get. And he says he's gone through 10,582 words and summarized it all so that you don't have to. And here are the top 5 macro insights that you need to know in just 3 minutes. So I think 3 minutes is worth the time to spend on this. He says, disclaimer, this summary only includes markets year ahead, which covers macro and market trends for the sake of brevity. Any mistakes are his. Do refer to the original report if you do mind the nuances or you want a full picture. Nothing in the summary is advice of any kind. And he goes on to say that the market report outlined what is covered as the liquidity still runs the world, the almighty US dollar, recession risk, the great recoupling, and then narratives matter more in bull markets. Let's go. So let's quickly go through some of this. I found it very interesting, and I think it will add a lot of value to you. So sit back, relax, and enjoy the thread. He says, introduction, the whole market part can be distilled down to one message. Crypto is macro. What happened in the global macro environment directly impacts the crypto market, period. Why is that? And what factors to watch out for. The authors suggested that there are 5 key points. Liquidity still runs the world. Global liquidity trends influence the direction of markets. The team observed that when liquidity flourishes in the markets, businesses expand and invest more, which reflects on asset prices because of better earning projections, and vice versa when the liquidity is gone. This forms the liquidity up, stock market up logic. But what about crypto? Similar patterns is observed with the future of finance. When liquidity is up, BTC and ETH go up, even more so with the total market cap of crypto when the big boys BTC and ETH are taken out of the picture. And then he says, unsurprisingly, capital flow of crypto funds stagnates when liquidity dries up. This is evidence with the shrinkage of crypto funds, the assets under management. And he says, so essentially liquidity affects everybody. Reversals in global liquidity is a key catalyst for a renewed bull market. So I'm a pretty conservative person when it comes to taking my trades and investments. And I know there might be some of you out there who are much, much older than me. Maybe you're nearing retirement age or have already retired. In that case, you probably want to be even more conservative than what I am. And what that would mean, if you want to be more conservative than what I am, you would want to wait to see that liquidity reversal take place. So you need to watch those metrics that signify that the Fed is completely pivoted and they're probably going to go back into some form of quantitative easing, even if it means that you're going to miss 150% rally in crypto before you can have confirmation of that. So he says here, the almighty US dollar. With growing expectations for higher rates and strong US economic outlooks compared to others, the US becomes a safe haven for everybody. As a result, money flocks to the US and demand for dollars send it to 20-year highs. A strong US dollar equals weak crypto. And then number 3, the shift from inflation to recession. The team theorized that the Fed may prolong its tight money policy or monetary policy to avoid mistakes of the 1970s. High interest efforts failed. Inflation bounced back stronger. But besides inflation, this extension of policy comes with the risk of recession. And that's going to be a hot topic, I think, for 2023, is whether we are going to go into recession or not. And your biggest risk is that they announce that the recession comes sooner than expectation, because that means it's not priced in and therefore the market may suffer. So you want to be very careful on your longs. Even if price action is showing you that it's time to go long, you need to be cautiously optimistic. So take those trades carefully. And he says here, and there are signs of recession lurking around the corner. There's a decline in the PMI, which is the Purchasing Manager Index, a decline in US household net worth, bad buying conditions for large expenditures, so houses, vehicles, etc. Basically, everyone spends less, and then the economy goes into a recession. And then he calls it the great recoupling over here. Verdict is crypto is unlikely to dissociate from the global liquidity trends and the US dollar. However, it should liquidity improve and the outlook for corporate earnings worsen, crypto should then move higher. So liquidity is good for stocks and liquidity is good, stocks bad, and then crypto goes up. And narratives matter more in bull markets. So in a bear market, economic conditions have stronger effect on asset prices. Remember, until we break high time frame structure, this is a bear market until proven otherwise. And we are very, very close from breaking that high time frame structure. But you can see on the weekly candle, when you look at last week's candle, the massive expansive candle, this week you would expect follow through to take place, whether that be to the up or the downside. You expect equal volatility, and currently that hasn't happened. I mean, we've been sitting pretty much coming into Wednesday now within exactly the same range, very, very tight weekly range. So this week is very important, and I do think we'll have our answer with regards to where we are in this market come the end of the week, possibly even later today, and I'll show you why when we get onto the stock market things. So under bull market, he says the project or event specific narrative takes the driver's seat of price change. So team predicts the merge narrative will be more influential as the market conditions improve. And that's basically it. Best takeaway 2022 was a necessary reset to kill overly hyped trends and speculation for healthy long-term uptrends. Market consolidations into Q1 before bottoming pattern, and then the uptrend will be revived in mid-2023. But the team think that the risk appetite and speculation only returns in 2024 and 2025. That ties in 100% with what I've said and with what I'm seeing. But I said this is the time of maximum opportunity as well. So if you do take a look at that tweet thread that I have pinned onto my Twitter, that shows the same thing, that the potential top of the next market cycle will likely come sometime in 2025, with us really going parabolic in 2024. What does that mean now? Well, that means that if we do go into a major rally, it is likely a relief rally, and only that, and it should be treated as that, but you can still make a lot of money along the way. And you want to be well positioned, because if it turns into something bigger than a relief rally, because we don't know from a macroeconomic standpoint what's going to happen, if they are going to stop raising and then start a new form of quantitative easing and kick the can down the road, that will of course stimulate the crypto into new highs, potentially even before reaching a blow off top in 2025. So a lot to consider, a lot to palate and think about. So what I suggest is, let's have a look quickly at these watches one more time. You guys can see these watches over here. These are both the Rolex watches. They are the Submariners, I think is what it's called. And there is two of them. There's a black one, and then there's a gold and the blue. If you guys do want to win this, all you need to do is go through onto my Twitter. I'm going to retweet it. There we go. It should be at the top of my Twitter page over there. There is a link below. The black watch is for Bitget, and the blue and gold watch is for ByBit. Sign up over there. There's a link in the description below as well. Everybody go through to that. Click on the link there. Join. Make sure that you're part of this competition. There's so many trade opportunities right now, and each trade is an entry. And I'm going to give you 2 trades that you can take today. So that should be your first entry if you have not yet taken the step to join in on that. So ByBit over there, and then the other one below is Bitget. One lucky winner in the month of February is going to win these watches. Well, 1 to each person, so 2 people should win, and we will have that sent directly to your door. Okay, moving on with price action. Here you go. You can see, as I mentioned, very, very tight weekly range over there. A lot of indecision within the markets, waiting to break through this major zone and create a break of structure and a higher high. The bear market only truly ends if you break this and then you start to form a higher low and then maintain that uptrend over time. So there is still a lot of work to do, and this could be a massive bull trap. And it's more what I'm seeing in the stock market that made me add a short position into my trade to hedge. And if you look at Nakamoto list, he says that if this pump is indeed real, then we'll see stable coins print very, very soon. So if you go through this over here, he goes on to explain. He says the total stable coin supply ratio with the RSI and RSI moving average, and he's got here 3 clean swing short entries so far this bear market. So each time you reach near the top of that trend line, 1, 2, 3, we are now coming into the top of that trend line again. And he says it looks like we're not there yet. Let's quickly go on to the rest of that. So he says in April of 2019, Bitcoin dramatically destroyed bears with a 20% pump in one single day, marking the beginning of the 2019 eco bubble. Is this time any different? Well, back in early 2019, the stable coin cap pumped a cool 165%, which is 2.65 times off of the bottom. What does that mean? You want to see the stable coin cap increase in order to sustain the rally. So he goes here. Then in H2 2019, which is like Q2, and early 2020, the stable cap flatlined. The result was horrible. Obviously, price nuked after that flatline. And he says our stable cap is falling. It's down from 180 billion to about 130 billion. Will it turn a corner? Will the relationship between the crypto cap and the stable cap break? A dramatic increase in the stable cap would be a strong bullish confirmation. So this is trending down, and typically that is not something that would sustain these types of rallies. And he says the stable cap decreasing means that people are on net taking money out of crypto to pay for cars, mansions, whatever it is that they want. It is my opinion that the sustainable bullish price action for crypto risk assets is not possible without a rising stable cap. And then he says, I think that the bulls have 10 to 20 days or so. This was posted 7 hours ago. 10 to 20 days or so from here to pump the stable cap if we are to get an eco bubble. And he says the gun is loaded over there. So that is something very, very interesting to look at. I think from a different perspective, these are some of the little alpha clues that you can look at with regards to the market to get a bit of an edge. And Income Sharks over here has also shown, now these are the main important things to focus on for the week. He says a big week ahead for stocks and crypto, looking to see which of these four makes the move first. That first move advantage will give you some sort of indication or advice of what to do next. And he says, first two are bullish if we go up. The second are bullish if we break down. Bitcoin is at daily resistance. The S&P 500 is at 4K resistance, massive resistance for that. And the VIX is at a major daily support with the DXY at support. So here you go, chart-wise, that's essentially what you can see. You got Bitcoin at resistance, S&P 500 resistance. You have the VIX pretty much at support at a level where you would expect it to bounce, and the dollar also looking like it's reacting off of that zone. So Benjamin Cowan showed over here this relationship, which you guys know this pattern well because I've shown you a lot with the S&P 500, and he says, should we call this the Tuesday curse? It seems like every top, and this is a relationship I hadn't seen yet, but every major top that we did put in happened on the Tuesday, which means if history holds true and this trend does continue, how many times makes a trend? 3 times. We got 1, 2, 3, 4. This would be the 5th time. Today's Wednesday. You should expect a reversal, a potential reversal if it does hold true. VIX over here is trending closer to the day. By the day to its trend line support that began all the way back in 2018, the reaction over here is going to be absolutely pivotal to the market. So that says volatility. This, VIX going up typically means that crypto and stocks go down. Wi-Fi also shows over here that the shorts cover once price or once their puts get within this region over here. So the blue line crosses the red, then the shorts begin to cover. And he said over here, mean reversion time, shake the hand. So basically shorts are going to probably cover. And that means that price is going to get volatile pretty much over the course of today. Here you have it, the ES on a zoomed in chart. There we go. On the daily, we are approaching that yellow zone. It may deviate already before there. I'm not really looking to short this from any of these zones. I'm more just looking at the reaction on the lower levels in case it presents an opportunity to buy the dip. My main area of interest is for the S&P 500 to catch support over here at the 0.382 level, which is coming in at exactly 3,800. That is my target for the next pullback, and that's where I'd look to potentially go long on a couple of different cryptos. I do anticipate that if the rally is real, it's going to bounce very, very quickly, as I have mentioned to you before. Ninja over here, he's been an extremely bullish trader in a bull market, very bearish trader in a bear market, so he's pretty much stuck relatively in line with the trend. And he says here that you can fade me all that you want, but you can't fade Powell. It's over and you don't even know it. So he's got the DXY over here on a 1 hour chart showing signs of a higher high. He's got targets up to 104 and 105. I wouldn't call this catastrophic for crypto. I'll just say that would present an opportunity for a pullback. You do know that I was looking for a potential tag of this 101.29 level, which is liquidity. But because of what's happened with the Bank of Japan, there is a possibility that these high lows will hold, and this will be some sort of a reversal. So his levels that he's showing is up to 105, which is pretty much a little bit higher. I don't think that it's as catastrophic and dramatic as this tweet is making it seem, at least for crypto. So hopefully that bounce will bring Bitcoin back into this zone between $18,500 and about $19,500, presenting an opportunity to go long, taking the risk and betting on the bulls, holding higher lows throughout, and then the next attempt they can probably smash through that resistance. So that's what I'm watching over there. We got the Coates moving averages, which look ever closer to turning back over. If we have one bad day, this will probably turn fully over, and then a downtrend or at least a pullback will commence. And with that being said, we have had Bitcoin in an uptrend for pretty much 18 days in a row. There was one day that paused. This tweet was made a couple of days ago. So it was made, here you go, on the 17th. And it's from Documenting Bitcoin. They say over here that if you do have a look, Bitcoin prices increased 14 days in a row, a single day away from making a historic new record. So here you have November 2013. You had 15 days in a row. And at the moment, we already broke that record because we've pretty much been going up only for a long time. So there should be some sort of a pullback at some point, and longs are likely to get a little bit punished and not have a complete free ride. So if that does play out, then you could have your cup and handle pattern. Same thing coming into this zone between 18.5, as I just mentioned, and about 19.5. Those are the areas that I'm eyeing out to lay my bids. We will also focus on some altcoins if the market does start to switch, only if it starts to switch. And I think notable ones to watch are these that are coming out with token unlocks. So you got Magic. They have more than 1 million tokens, which is 600,000 every day from January the 26th all the way to March the 3rd, meaning that for a long-term play, if you do like the fundamentals of these types of tokens, that could be an opportunity once the unlock has completely finished and the selling pressure that hits the market is over. DYDX, 100% of circulating supply on February the 2nd, massive unlock. 1 inch has 33% of circulating supply on Feb the 7th. And then Sandbox has 12% of their circulating supply unlocking on February the 14th. Take a screenshot of that, keep note, put it in your calendar if those are coins you're interested in. Okay. A couple of things over here. Let's just move on. I'm running out of time. This is the whole portfolio list. I will be slowly but surely uploading all of these onto Discord. So we'll get to that at a later stage. For now, I want to lay a grid strategy on Bitget. So I haven't done this for a while, but since there is a potential opportunity to go long, I've selected the futures grid, long grid. I'm running with 3x leverage. The parameters that I'm going to put in. So all you need to do is you need to go to the grid strategy, which is, let's just see, here you go, strategic trading. And then you click futures grid trading. You'll come over here, click on futures grid, make sure that it is on Bitcoin. So I have Bitcoin selected. They're all down along the side here. And I'm setting my lowest price at $18,000, my highest price at $20,000. I've put myself 8 grids on 3x leverage, and I'm putting all the available capital in there. Take profit is at $25,000, looking for that relief rally to continue with a stop loss at 17.5. So that's going to stagger those orders for me all the way down, meaning that if the pullback is very, very quick, I should gain an entry. So let's create the order on that, confirm. Okay, order has been confirmed. Once price moves into that zone, all those orders should be put into place. If you do want to follow along, not only do you have the opportunity to enter into the Rolex competition, but you can, of course, also get sign-up bonuses. You can use the same link below, the Rolex link for Bitget over there if you do want to follow along with that strategy. Okay, moving on to the low time frame price action. Same thing, nothing has changed over here. I'm viewing this blue box as my main area of interest, which is between 19,900 and 20,200. I think that's one of the most likely zones. It also matches up over here with the 50-day moving average. Okay, not much to show on that. Then I outlined on a tweet that when price grinds up like this into resistance, I often think that it's going to smash through. That's typically what happens. Another thing that made me think that is if you do look over here at this candle, let's just quickly grab that. There you go. This candle over here, it was a swing failure pattern. It tried to swing high and it failed. It rejected off of that and came back down. So that tells me that pretty much this area it should have rejected. It should have rejected immediately. So if you see swing failure up, rejection down, then you want to see a breakdown very quickly. Because the breakdown didn't happen immediately and price grinded like that and consolidated sideways at pretty much the same levels, I started to think that it's best to take a long opportunity. Now, the reason why I also took a short is because from a risk to reward, it doesn't matter which one goes wrong, I'm going to make money either way. The short is because of what's going on in the stock market and the DXY possibly bouncing off support. That's kind of what startled me a bit and made me think I need to cover my position, my long, by at least putting in a short play. So essentially the way that I did it, and I'm going to show it to you on my Bitget, my ByBit account right now. I'm just quickly first want to show you the target levels. So the long is based off of this almost an ascending triangle pattern that's holding over here after a big move up. And that consolidation, if it has a breakout, my next zone I'm looking at is all the way up here as the liquidity is at 22,800. So I would probably take my profit halfway. I'll take half my profit over here, and then the other half I'll take at the top. Okay, my stop loss I have pretty much below this wick over here because I entered earlier. I think I entered somewhere around here or on these wicks that were coming down. And then if it goes down into that zone, pretty much I'm going to stop out because it's breaking down the trend line. And then it may turn into a 𝗲𝗏 pattern. So you know Bart Simpson, for those of you who are new, just go look at the shape of Bart Simpson's head. It's actually a pattern that seems to work out in crypto. If that fails, I'm looking at 19.2. Not because of the Bart Simpson pattern, but just because this is where I see the main support. Okay, and the way that I've played that one, and I'm going to give you those exact levels on my ByBit account in just a moment. The way that I've played that level is with my invalidation above the swing failure pattern, which is coming over here. So my stop is above there, and my entries have been staggered. I have one entry that's been hit over here, and the next one is closer to the trend line. So we can move into that. Let's quickly show you that. This is the trade. Let's just move that up, and I'll try and make this big. There we go. Make that big for you. So here's the trade. Have a look at it. A lot going on in terms of the colors and stuff. What I'll do is I'll make this bright for you. You can probably just screenshot it. It's going to be the easiest way for you. So let's pick this up to about 40. Pick this one also up to about 40. All right. Okay, that's the long trade. I'm going to read it out to you. Stop loss I have placed at 20,772. My entry, I have multiple entries over here because I'm looking to, my first entry is at 21,063. My second entry will come at 20,920. And then the take profit is at 22,794. Okay, this one over here, I'm going to just read out. I don't want to waste too much time. The short trade over here, stop loss, I have placed at 21,758. That's 21,758. First order, which I have been filled on, was at 21,292. My next order is going to come into place at 21,590. That's on the short trade. And then the take profit is at 19,275. I hope that helps. Inputs. Okay, rather do that. There you go. That should show you the inputs over there for you. So you got everything. Inputs, take a screenshot, and inputs. There we go. Take a screenshot and you have everything for that trade should you wish to take it. So that's the thinking. One of these will get stopped out. Now, you may wonder how this is supposed to work out. Well, if you do look over here, my risk on these trades, let's just grab the ruler, is 1.7%. And my risk on this one is, it's about the same, I think, 1.4%. So I'm risking 1.7% on the short, 1.4% on the long. I'm already in profit on the long. The short is close. The idea is that I was entering into this trade on each extreme. So enter onto the long based off of the trend line. And then, you can see the upside resistance, the upper trend line or horizontal entering into the short. Therefore, when this does break out, one of them will stop out. But because these are risk to reward trades of 1 to 5, and this one over here is about a 1 to 6, it means that either way you should make profit. It's almost like a nest price literally wicks up through your stop loss and then wicks back down through your stop loss. That is pretty much the only way that you're going to double or compound your losses on this trade. Okay, that's that. Bitcoin algos are buying on the 15-minute chart. They do work off of these 15-minute charts using the 200 SMA. They also often use the 50 moving average. That's when you start to get into trending markets. And he says it's a good risk proxy for day traders, confluence of momentum to ride for the trend plays. And you can see every time it reclaims or it breaks down, but it reclaims that there's no closes below that 200. So that is a trade idea that you can use. 15-minute chart, you run this with a 50 and a 100 moving average. The 100 crosses above the 200, and that's typically these little trends start to get into play. So if price comes down and tests onto that 200 moving average and you're looking to go long, that's an opportunity to add to your potential position, which is another reason why I have my stop loss below these areas, because you would have to properly lose that 200 moving average on the longs at least. Okay, liquidation levels are coming in above 21,700 and below at 20,000 and 20,500. So if you do look at the liquidation levels over the last couple of weeks, here you can see massive long liquidations that took place in November. Then we have the massive short liquidations which took place on the 14th of January. That is for Bitcoin. Ethereum looks very similar, but their liquidations are much more serious, at least on the shorts. These are shorts being liquidated. And basically what I'm saying over here is that for the most part, I think the shorts have been liquidated. So probably you need to be looking for longs to get liquidated at the next major levels. Have we gone high enough yet? I'm not so sure. I just don't know if we're going to break down or not. I mean, I'm definitely giving a good dose of I don't know at the moment, and there's nothing wrong with that. As a trader, this is why your risk management comes into play and why I am taking this trade essentially in both directions, because I'm not 100% sure. What I am sure of is that eventually there will be some sort of a major pullback. And then in terms of risk to reward, doesn't necessarily mean the pullback will come down to a much lower price level, because if price rallies all the way to 26K and then only pulls back and you end at 20K, you're pretty much at the same place, right? But from a risk to reward perspective, you have a better entry, a safer entry. So keep that in mind. That's it from me, guys. I really appreciate all of you. Quite a long show, but I think we covered a lot of important stuff. Please make sure that you join the Rolex competition over here, or the giveaway at least. It's not a competition, it's just a giveaway. Sign up using ByBit, sign up using Bitget. The more trades you take, the more chance you have of winning. So each trade is an entry. Give the video a like, hit the bell notification, and definitely subscribe to the channel. One more thing. There is one more thing. I almost forgot. In 2 hours time, whatever 2 hours is from now for you guys, it's going to be 12 SAST. Go onto the Discord if you're a member. If you sign up to Bitget and ByBit, by the way, that is also your ticket into the VIP groups. And what I'm going to be doing is I'm going to be joining our Discord manager of the Discord group over here, Josh, and all you need to do is click on live stream over there. You'll get a link where you can join that. It is limited capacity. I'm going to be taking questions and answers. I'm trying to help you guys as much as I can, obviously in these difficult times when the market starts to switch like this. So that's it. I'll see you all on the next video. Have an absolutely stellar day. Cheers for now.